everyone, welcome to Insurance Mantra, your weekly guide to the world of insurance only on ET Now. In today's Leadership Insight, we look at the changing face of India's life insurance industry from rising consumer awareness and changing buying behavior to big reform like 100% FDI and Bima Sugam. We'll also look at what can truly drive insurance penetration in India going forward. To discuss this, I'm joined by very special guest, Kamlesh Rao, MD and CEO of Aditya Birla Sun Life Insurance. Thank you so much, sir, for joining our Insurance Mantra. Sir.
My pleasure.
Sir, I want to start with, there is a debate going on after the government's data and IRDA data that insurance penetration in India has reduced. A number of policies have reduced, but on the other side, regulator is saying that India is growing at a very good speed, very good pace. Our GDP is growing, and India's insurance is most affordable. So one should not look at India's insurance industry with a penetration only. So what's your take between these two debates?
I think the debate is true that in the last 5 years, if you split it, 5 years back, 3 and 2, all the 5 years have a common element that growth has happened on premium, but not necessarily that policies have grown. But in the last 2 years, if you look at growth in policies, along with growth in premium, it is reasonable. If the industry has grown at about 10 to 12%, the policies also have grown by about 6-7%. Because if you fast forward for insurance for all by 2047, it will typically require roughly about a CAGR of 6 to 6.5% growth in policy count.
Okay.
Because remember, in 2047, India's population will get to about 160 to 167 crores. If the insurable population, which is between 18 and 60, if that number is roughly about 100, 102 crores, from where we are today, if we have to have insurance for all by 2047, roughly between 6 to 7% policy growth is important. And I think as insurers are focused on premium growth, which all of us are, I think the need to also focus on policy growth in a bid for insurance for all by 2047 is equally important.
So what catalyst you think that it's required for the policy growth and that will eventually result in overall growth?
So somehow what has happened is urban markets growth is significantly better than say tier 2 and tier 3 markets growth. And I think what insurance industry has to get to is to say how to reach the tier 3 and tier 4 markets.
Okay.
You look at the first product that is sold in insurance is normally protection. Yeah? So typically in a urban metro or tier 1 metro, the levels of protection that you sell is say 50 lakhs, 1 crore sum assured. That's the average range that you sell. If you got to get to tier 2 and tier 3, tier 4 locations, you need to be able to sell a 10 lakhs, 15 lakhs and a 20 lakhs product, which I think is something which is missing from insurance industry, both because reinsurance also is not available for this segment, because you remember that as insurance, we need reinsurance support. And my sense is the new regulators' Bima Sugam aspiration to try and bring in standardized products, start with something as small as 5 lakhs, then maybe move into products which are 10 lakhs, 20 lakhs cover, if it is available on this platform. That, my sense, would be the biggest driver and the catalyst that will happen for...
Bima Sugam may change the scenario going ahead.
See, my view is the thinking process of the new chairman, as far as Bima Sugam is concerned, is to say, try and see that we can get standardized products, try and make sure the industry brings something which is standardized and can get distributed, so when people come to the platform, they know exactly what they are buying. But eventually, is also get to move towards being able to make sure that all your products on protection are discoverable on Bima Sugam at a platform, and they should obviously be significantly cheaper because it's available on the platform, and hopefully we don't know what the contours of the cost will be on distributing products on Bima Sugam, but they'll definitely be cheaper than where it is today.
Because sir, because the zero commission will be there in the Bima Sugam product, so that will also make it affordable and cheaper.
I don't know whether, Bima Sugam also is a platform and it will have its own costs, so I don't know whether zero would be a reality or not a reality. But my sense is it will be different as compared to what is getting paid in the marketplace today. And as it is, there are discussions around what should commission guidelines be for distribution of life insurance. So whenever that comes to, whatever equilibrium it comes to, the regulator is very clear that whatever benefit that happens to the industry on account of, say, assuming commissions get more standardized or becomes different than what they are today, the entire benefit of this needs to be passed on to the customer in terms of either lower premium, better price, higher
It will
return.
disrupt the agency channel also represent there from ages, because for most of the companies, sir, agency channel contribute major part of their business, and on that, if Bima Sugam and new commission regulation, do you think that will also disrupt the complete agency distribution channel?
If you look at, say, India's buying patterns, so it's like saying online is cheaper. Yeah? You do shopping today on e-commerce, online is cheaper, but that has not shut down the offline shops. So I think both will have a place for sure. Discoverability of products will become simpler. There'll be a particular customer segment that may be happier buying simpler products. If you're buying a protection, maybe it'll get bought on some of these platforms much easier and faster, because you're basically buying a cover and you're paying a premium. But if you want to plan for annuity, you need an advisor, you need a distributor, because you're planning something for 20 years, 30 years, 40 years. So my sense is like all...
scope is there for both.
Both will coexist.
Both, yeah. And the number of policies you say,
the number of policies
6%, 7% growth
will go up significantly when the platform gets discoverable.
Yes.
And supported by the regulator, driven by the regulator, I'm saying it will have a lot of merit.
And so what's your view on the regulators now plan to bring in the complete distribution reform also? So new consultation paper regulator is all set to unveil. So how it will change the distribution and commission?
See, I've been part of the executive committee of the Life Insurance Council. I chair the Insurance Awareness Council, so I meet the regulator reasonably frequently. I think the approach and thinking of the regulator is very simple. What do we do to make sure that insurance penetration goes up? Yeah. So if insurance penetration has to go up, distribution is critical. So obviously you want to look at commission regulation, but they have to be good enough. And what we are hearing is to say it has to be
because there is some pressure on regulator from. There was a mention in RBI's financial stability report, economic survey, that in life insurance, commission growth is more than premium growth. So there is some sort of pressure on regulator also.
Yeah, so I mean, I don't know how to comment on that, but I'm saying typically as long as whatever is done helps customer offtake significantly, does not disrupt the distributors in the business at this point of time, because obviously you don't want to do something which will take distribution back by 2 years.
Yes,
yeah,
sir, yes, sir.
It doesn't augur well for, say,
you have to balance it.
You have to have a balance and my sense is that's how the regulator is thinking. So maybe the quantum of money is fine, but maybe it may be more back-ended. You get paid better for better persistency.
Because insurance is a push product, and you need some sort of incentive for agents, for brokers to push that product, sir.
Yeah, so I mean, because I've been from banking, been from the equity markets, I always wonder, what does this push mean? You know, it's
nudge, you can say so.
Yeah. So my view is that it requires a little more understanding, because everything else that you're buying, you can see the benefit of what you're buying immediately. You buy a house, you buy a car, you buy a shopping, you see it immediately. Here you are buying something where you will pay me for 10 years time frame and you will start seeing the benefit after 10 years. So it requires more discussion. And that is where I'm saying, as long as for the effort involved, the commissions are commensurate, it will augur well both for the distribution as well as for customers on a long-term basis.
Okay. And sir, now regulator is also pushing for listing for insurance companies. So do you think that going ahead we'll see a lot of smaller insurance companies also on a public listed platform, and what will attract them to go and list? Because still the market share of most of the companies in single digit only.
It is true. So I'm saying regulators' view is that if listing means high governance, higher transparency, my view is that it has to happen, but it has to happen for a right reason. Yeah. So it's a capital-intensive industry at this point of time. I mean, I'm more looking forward to say when the risk-based capital regime will come in from the regulator, because I genuinely think that the capital that we have in this industry is higher than what is required.
Okay.
And therefore the return on equity of the capital that we put is not so great. Now, when you do 100% FDI, which say the regulator has done, or when you want to move to shifting to listing, these are the norms that people will see. So I think the regulators move to IFRS. Which is a welcome move, and I think very soon we will see a regulator pushing us to move to risk-based capital, are two important changes. And once that happens, then I think the ability for life insurance companies to list, the ability for analysts and everybody to look at actually how we are performing will fall in place well.
More and more,
it will be more
analysts will understand.
Yes. Because in the IFRS world, you understand exactly what is the business you have done, how much money has been made through the actual insurance, through investments, how many of your contracts are onerous, and so on and so forth. So my sense is when IFRS comes in place and RBC comes in place, and it settles for a year or two, it may be a good time for looking at listing as an opportunity.
Okay, sir. So now I'll move to our leadership rapid round, and you have to answer these questions very spontaneously. So my first question to you, term insurance or endowment policy, heart says what and CO says what?
Heart says term always to buy with first. And once you buy a term policy, make sure you buy the endowment next.
Okay, अच्छा किया insurance लिया और सबसे पहले life insurance. Which campaigns wins your vote?
Now, I'll always say अच्छा किया insurance लिया. लेकिन जब लिया तो सबसे पहले life insurance.
Okay, sir. If life insurance in India is still sold emotionally and understood financially later?
I don't think in the last 5 years that's true. I think it is understood financially.
Are commissions still the industry's most uncomfortable debate topic?
I think it's the most important topic to discuss. I don't know about uncomfortable.
Should commission be linked more aggressively to long-term persistency?
Definitely.
Has the Life Insurance Council been proactive enough, or does the industry expect more?
I think the industry expects more.
One idea regulation that genuinely changed the industry for the better.
Risk-based capital.
One wish from IID that could realistically be approved immediately.
Risk-based capital and IFRS.
Affordable life insurance, industry challenge or customer perception problem?
Industry challenge.
Mutual fund versus life insurance, competition or perfect financial partnership?
If your time frame is 3 years, mutual fund. If your time frame is longer than 3 years, life insurance.
If a 25-year-old has limited money, SIP first or term insurance first?
Always SIP first at 25 because you develop the habit of investing on a regular basis, and then maybe term insurance.
Guaranteed returns, customer comfort or industry dependency?
I think it's the most brilliant product that customer can buy from life insurance.
Is digital insurance reducing cost or just changing the sales pitch?
Digital is improving productivity significantly and therefore bringing down cost.
One life insurance myth Indian customers still strongly believe in?
They think that if they pay premiums for term insurance and they still live, all their premiums will go away. But 40% of the term products that we sell, you can actually get all your premiums back.
One thing the life insurance industry seriously need to stop doing?
Complicate their products.
Having worked in both stock markets and life insurance industry, which industry understand risk better?
Risk better. I don't think that anybody understands short-term risk better than the equity markets. And there's nobody who understands long-term risk better than life insurance.
In one line, biggest difference between investing and insuring?
When you're investing, focus on returns. When you're insuring, make sure you get what you are supposed to get on a guaranteed basis.
Sir, what would be your short and crisp insurance mantra for our viewers?
I think insurance is a very important asset class in your overall basket. It's very important. People often think between mutual fund and insurance, is there a divide? My sense is if you're thinking for a short-term basis, I think mutual fund is fine. But if you think of a 10-year, 15-year basis, I think it's important. Again, a lot of people in India should remember that we are aging as a population now. 60 plus is going to be more than 25% of the population. My view is or worry is that annuity, nobody has thought about what will happen to them and how it is good enough to take care of your retirement age. I think you need cash flow and a stream of income, and therefore look at insurance products for planning streams of income that you can get over really long periods of time. Because we're the only industry that can give you a product which says guaranteed for 20 years, 30 years, 40 years.
Thank you so much, sir, for joining our insurance mantras. So time for a short break now. After the break, we'll be joined by RM Vishakha, former Managing Director and CEO of India First Life Insurance. Stay tuned.